So yes, we have the data for Microsoft here. Let me just show the price right now. So the price has fallen from the highs of $517 to right now it being around 300. I think it's below $400 right now, $380 or something. Yeah, $392.
392.
Right. So let's just first see that, is there something that has fundamentally changed for the company? Like why is the stock falling? So the first thing is that their revenue is, as you can see, really accelerating. So there's no problem with the revenue. Uh, Segment wise, also the right segment is growing because they are one of the biggest cloud providers, right? Among the top three. So that metric is also great for Microsoft. What people are really worried about, I think one of the major reasons, what we talked about in the last podcast as well, is the RPO, right? The cloud backlog. So basically, this is the money that has been committed to them but has not been paid, right? This has basically gone from $368 billion, also, which is a huge amount, to $625 billion. And majority of this is from OpenAI. So the
Around
fear is that,
45.
yeah, the fear is that what if OpenAI cannot pay all of this money? Then
Almost
that's a
half of
loss.
it. It'd be
Almost half.
crazy.
Yeah,
Imagine it goes bankrupt and then 45%
right.
backlog just gets dissolved to zero.
Yeah, that's the biggest concern. Uh, but otherwise, if you see, so basically, again, here also, the decision that investors have to take, that do you believe that OpenAI will be able to pay back this money, and or Microsoft will be able to hedge its bet, right?
Yeah.
That is where Google kind of shines, because Google does not have a one or two customer risk, right? It's not like two of its customers, if they go away, their revenue will just cut, will be cut in half. That's not the case with Google. That's why it's not fallen as much in this bear market. But if you see the price to earnings ratio, also Microsoft is trading at almost lowest PE that it has traded in the last 10 years. So it is at 24.5 PE right now. You see, in the 2022 bear market, this was at 24.66 or around there. In the 2020 COVID crash, the stock was, let me get it right, I think around 23.93. So as you can
Yeah.
see, I can literally draw a line here
Yeah.
that act as a support. Historically, some people can argue that this is a very good price that Microsoft is available at. Also want to show a quick chart that we showed for Netflix. So for Microsoft, as you can see, this is also almost touched the 200 weekly moving average. But the
Yeah.
point to note here is that in the last 10 years, let me just pull back, zoom out the chart a bit. Yes, as you can see, there's a small circle here as well. This was in 2015 or something. In the last 10 years, there are only 4 times that Microsoft has touched the 200 weekly moving average. If you would have invested here, if you would have invested here, if you would have invested here, you would have made a lot of money from just Microsoft. Now the question is that, should we just blindly buy at this level? I think I'll just say the same thing that I said for Netflix, that we'll have to wait for confirmation, right? We'll have to wait for the bounce, wait for 1 2 weeks for it to sustain. Obviously, the risk there is that you will lose that 10% gain, but I would rather lose that 10% gain and not take the risk of it just breaking this and falling even more.
King
So
falling knife.
yeah, and then you'll be literally be stabbed by this knife. but yeah, something to
So,
look out for. But as a mental model, I think it's a good mental model to be aware of what are some good buying levels for these great stocks.